G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So the topic for this video, we're going over some jobs data, some that's just come out, and then some upcoming important data to look out for. And we'll look at the charts as well. Just looking at the stock market, Bitcoin, Ethereum, and the yield curve, how that's developing. And yeah, look at the job openings on the chart to finish off, and then the unemployment rate as well. Looking forward to on Friday night here in Australia. So yeah, big end of the week to come. It's going to be very volatile. Well, with the current state of the markets and where we are, and on the verge of a recession. So let's get into it. So first up, we have the job openings, the JOLTS, right? And we had consensus at 8.1, and the forecast is pretty much the same. Previously, it was 7.91, okay? So for July. And then we came in at 7.673. So a lot less openings than previous month, and obviously way below estimates too. So that is not a good sign. So click in the job openings chart here, and you can see from a year ago, it was 9.3 million jobs added in August 2023. And in September, we had 9.3 million. And we had a big drop to 8.69. Had a little rise up in November, 8.93, and 8.9. In December and January, 8.75. February is, it sort of clicked up a little bit, 8.8 million. And then it's sort of flat period. And then all of a sudden, we had a big drop, 8.36, and a massive drop to 7.92. Bit of a rise up to 8.23 million. And then 7.91 previous for June. And then for July, we had 7.67 million. So you can see it's on, if you look at this chart, it's on the downward trend, obviously. And these bars, if you draw a line through them, it's from top to bottom. We're obviously trending down, which is not a good thing. And 5 years ago, so from the top of 2022, March, 12.2 million, and we've been on the decline since. Okay, so not good there. And I'll show at the end what happens when you get these contraction periods, but for now, it is very, very bad, and it's signaling that the recession is very, very imminent due to the amount of openings that there are. And there is less and less and less openings, which is not good for the job market, the economy. So that's that. We have factory orders month over month, which increased by 5%, better than consensus at 4.7 and 3.8. And the previous month was -3. And yeah, then we have the ADP numbers coming out tonight at 10:15 p.m. So the forecast is 145. Consensus is 145. And forecast 115. Previously 122,000. We'll see what happens there. Are we going to go down or up? Will it be bearish or bullish, the job market? That's tonight's data. And then coming up, we do have non-farm payrolls in the US. And yeah, this is a very, very crucial number. If it goes lower than 100,000 or lower than these two numbers, 160, 120, we're in for a big panic, I think, in the markets. It's not going to look good. And especially at the same time, we have unemployment rate, which is even bigger, in my opinion, bigger data numbers. And the estimate consensus is 4.2 and 4.3. So either a drop or staying flat. That's what the predictions are happening. And previously it was 4.3. So will we get an uptick in unemployment rate? And if we do, recession is just closer and then you think very, very close. If it does come in flat, then or drops to 4.2, then maybe recession is delayed slightly. But nevertheless, these will be very, very crucial numbers coming out tomorrow night. And then we have the Fed Williams speech after that. So that is for the week. And ignore the Australian data. It's not really important. But yeah, it's American stuff is what drives the global markets. It's the US, the world reserve currency, okay? The global power, and it is what the world is watching right now. There's a lot of countries that are going in recession, and the US hasn't, but it's on the brink of happening, okay? So that's that. All right, so the first chart here, you've got Bitcoin on the 3-day time frame, and being in this downward channel, of course, it's parallel channel, and it's sloping downward. And as you can see, it's just, the highs there. You got a low, lower high, lower low, lower high, lower low. And this low come back to this cluster of consolidation, not very long, February to February, basically 2 weeks, that cluster, and that shot up, didn't last long at all. But nevertheless, this is an important level, 51K, all right? And yeah, we've got a lower high again, all right? And are we going to come down and make a new lower low? Is a question we're sort of thinking about. Or we shoot up higher. Anything's possible, okay? We're in the middle of this zone. You've got the middle here at 61, 71.5 is the top, and 51 is the bottom. So we're sort of hovering in the middle. And it's just waiting for the jobs numbers, I believe, is what is getting the catalyst for its direction. They're coming really weak and bad. And obviously Bitcoin's going to go bang, straight down to here. Even sooner than that, And then eventually the rate cuts come, all right? So rate cuts around here, all right? That's what sort of going to see. And then will it hold, or will it go down, or will it hold and go up? We could have one last push up before we can go down, all right? I do see us hitting this line, okay? This big upsloping trend line, which was the 2022 low, okay? The summer lull in 2023, and then here in a third touch at 41,000, and this is big cluster here, all right? We haven't come back and retested it. So to me, this is the big drop we're going to get. And if we can go lower, we can go lower. There's levels below that, of course, like this high here, 31. That's really bad. But yeah, 41 for me is the base case low for this cycle. And then we go higher from there. All right, so that is the Bitcoin charts. All right, and the intermediates, long-term and little short-term moves, but anything can happen. Job numbers are coming better than expected, and Bitcoin could just shoot up. All right, so if they do come in, we have to reclaim this level. All right, we have to break that level. It's also the bull market support band, as you can see there. This is the weekly, so 21 weekly EMA and 21 weekly SMA. All right, so this is sort of starting to slope down, but we're touching just about 61K. This one's slightly above at 63. All right, so when this comes down, obviously price will have to break through. So that's another crucial resistance there. Okay, the moving averages along with the horizontal support line. Okay, that is that one to look out for at the current moment for Bitcoin. And we have Ethereum, the 3-day time frame, and it's sitting at its wedge. Okay, this wedge here is formed. This big zigzaggy from the very bear market low, $880 up here, $2,000. Then came down, came up, down, up, down. We broke it eventually, and then shot up. All right, now we're coming back down. All right, interesting pattern in it. Very, very interesting. If I zoom out to the weekly, show you a bit better, and go on actually, might be right like that. You go back to 2019. It's similar, okay, even if I go on logarithmic. You can see the wedge a bit clearly. And you can see we made a low here, the bear market low in 2018, December. Shot up, came down. You could count that one if you wanted to. Consolidation, shot up, came down, shot up. All right. And then back into the wedge. All right. So it's the very same pattern. If you go automatic, if I just scroll out a bit, you'll see it's respected it, okay? Expected this upward sloping wedge, rising wedge, and we came back down right before the Fed cut rates, okay? And I like to point this chart out every single time when we could overlay interest rates Okay. And there it is there, the cut, right? And he had the month before was mid-June, okay? And right before the cut, it topped, then came down, and then came back into this wedge right when the rate cuts arrived. When they came, it consolidated for a bit because it was an off month. August was only cut in August. Then boom, they cut the following month, September, and obviously it sold into it again. Okay, it sold into this one, sold into this one, and then sold off again into this one. But then it set sideways, and then it dropped, just fell off a rock. And that rallied up as rates flattened, and then they slammed rates during the pandemic to ease the conditions there, and obviously prices went ballistically down and freaked out. And then we came back to this yellow line, which is basically this cluster here of lows. But the low was 80, but this one to 90, as you can see the wick there, and it came back to the bear market bottom. Right. And similar now is we've got flat rates. It's got a cut. When the cut happens, okay, when this cut occurs, however big it is, I don't know. To wait and see how big the cut's going to be. It's going to be a determination of how much the market freaks out. And we're at this wedge now. We come back down lower right before the cut, 18th of September, I believe it is. And then we should, if more cuts come, we should really eventually just break, and head down to this 1500 level. And then eventually to my lower target of $1,000. It's where I see Ethereum going, which is the bear market low, just around 80, but slightly higher, $1,000. A bit like 2019 into 2018 there, sort of late 2018 and 2020, and we came back to that low. Okay, we revisited the lows. Now I do see it's doing the same thing this cycle. All right, after this infamous rate cut on bad data. If the job numbers come in negative, really bad, the ADP and non-farms, and then the unemployment rate rises. This will be really, really bad for markets. Okay, there'll be a line in the sand, and the Fed to cut rates. It'll give them the green light, and whether how aggressive it is, we'll have to wait and see. So we don't have that. So that's Ethereum, and the SPX, which is the stock market, S&P, and obviously you've been grinding inside this triangle, upwards wedge, if you want to call it that. And I'll just do the same thing with this thing. See there, from the 2023, June, I should say, to here. Okay, so July to October 2023, bam. 2024 now, April, come up to it, and then we've broken down below it. All right, and now we're making this high here. Will we break this high? What we're wondering. So this big fat candle here, this big purple candle on the 3-day. It's not looking quite bullish, but it can still reclaim and go higher. It's not stopping it, but we're in trouble, all right? We're in big trouble. All right, because we're grinding pretty high. And I'll pull up a MACD now. You can see it's MACD starting to, sloping downward. Okay. As you can see, price makes higher highs. 1, 2, that's a little bit lower high than that one. Course, okay, but the MACD, see, high, lower than that, a high is lower than that one, and that one is lower than that one. Okay, as you can see, it's higher than that one, so it's getting 3 drive divergences, and obviously that one there is lower than this one, and then this high is getting lower, so it's starting to weaken and flatten out, and it might roll over quite soon. As you see, these red lines on the MACD show divergence. And it's been happening since, August or July of 2023. So it's playing out over a good period of time. And it's looking quite bullish for the S&P. And I still see it coming back down at this for ultimately hitting my low target of 4,600. I just think this being the base case for this big sell-off. If it gets really bad, then 4,100. Okay. So that's what I see. This recession. Nothing too shabby. From this level here, that is 16%, and this one here is 25%, all right? So that's the S&P. And it all depends on the job numbers and the Fed rate cuts coming and further data and GDP numbers coming out at the end of the month as well. It'll be very, very telling to see where the economy is heading. That's that one. Then we have the 10-year versus the 2-year, or minus the 2-year, I should say, maturity. And you can see it's above the zero line. Okay, we're at 0.01. All right. And we've uninverted, officially uninverted on the yield curve between the 10 and 2-year. So that is an interesting observation there. And every time we invert, come below that yellow line, and then come back up, boom, recession. Happened here in the 2008 financial crisis. We inverted, came uninverted, but then it reinverted. So a bit of a fake out. Came back again, and then eventually took off to the upside, and then we had a recession. All right, that was a great financial crisis. 2001, the dot-com bubble. We inverted, then uninverted, came back above the yellow line after we went below it, and then boom, recession. This was a fake out, okay, a fake signal. So it was a false signal. Then go back to the 1990 recession. Okay, we inverted, uninverted. We chopped around for a bit, and then shot up, and this big shoot up, boom, recession. Okay, and that happened here in the 80s, so back to back. So 1980, obviously before that, 1978, it inverted, then uninverted. But it was a very recession before it uninverted. See it shaded red before this white line went above the yellow line. And we happened again, back to back, 1981, and it uninverted. And obviously we were in a recession. So that's what happens when the yield curve uninverts. We get recessions, all right? Go back to the 80s. And is this time going to be different? You tell me. I don't think so, but that is that. As you can see, look at that, exactly the same. The 10-year and the 2-year are both 3.768. They're identical, the yield on both of them, all right? So that's quite interesting. And they're at their support line, the 10-year is, okay? And the 2-year is sitting right on support as well. So this is critical. This is crucial that it holds and shoots up, or boom. If it breaks, then this chart here, so those two break down, this will break up, okay? But it depends on the severity. If the 2-year falls more than the 10-year, then this will shoot up, all right? That's the catalyst for that. So that is the 10-year, 2-year, and I'll finish up on the job opening numbers, all right? So every time, going back to 2001, unfortunately, with this chart, but see it's red ribbon and it's big decline. We have a recession happening here. So we went from green, all right, to red, and you can see the downtrend there and the job openings, and they decline, and then boom, 2008 great financial crisis recession, and there's a green, nearly turned red, so we went flat, green. All right, as you can see, and then red, boom, recession in 2020, and then now it's seeing it decline and recession 2024 or 2025. Big question mark for that one, but that is what we're seeing. It's the numbers I just talked about, all right, at the start of the video. It's 7.67 million jobs. So a big decline there. And looking for this unemployment rate. All right, just finish up the video. Right, loads. All right, beautiful. And this is what we're crucially waiting for tomorrow night. 4.3. Will it break even higher? Because every time it turns green, as you can see there, recession 2020. It turns green. 2008 recession turns green after the red decline. Unemployment starts to rise, and obviously recession.com bubble. 99 recession went from red to green recession. Then you go back to back-to-back 80s. So went to red to green recession. Red to green recession 980. Red to green 970. Basically 3 to 5, the long one, that one, and the 970 to 970, 1 year basically, and went from red to green, and a nice shoot up, then a recession. We had a fake one here, but didn't like curve up, sort of went flat. So that's why it was a false signal. This one here was sort of similar, went flat. Okay, so there's two false signals if you want to count them. Then went from red to green, recession, 1960. This is sort of chop, sideways chop. Red to green, durably, okay, nice vertical sort of peak. and started to take off, shoot up straightwood, and recession 958, and red again to green in 953 recession, and the late 40s, 48 to 49, and the same thing occurred. Okay, so pretty accurate, pretty good. And yeah, like we're taking off now. We're actually shooting right up, so it's starting to vertically just skyrocket essentially. And that's what you want to see. Like this, see, it starts to just take off. Once it does, it just forms a base, nice round base, and then boom, just takes off like a rocket. So that's what's forming right now. And we'll wait and see what the numbers come out tomorrow night. That is that. All right, guys, I hope you enjoyed this video. Just going over the economic data, so job openings that came out, and they came out worse than expected. So definitely less and less job openings hitting the US market, which is not good to see. We also looked at the factory orders were better than expected, which is okay, fair enough, whatever. Not really important data anyway. And then looked at ADP, which is coming out tonight, and that is crucial to give us a hint to what's happening tomorrow night for non-farm and unemployment rate, which will be very, very volatile data releases tomorrow night. So interesting to see that. And we looked at some charts, Bitcoin, Ethereum, the stock market, where I see them heading, targets for those ones, and the yield curve, the 10 minus 2 year, and seeing it's uninverting. So we're in the process of, the 10 year giving better yield than 2 year. And when it uninverts, recession comes shortly after that. So not long now. And you looked at the job openings and unemployment rates as well. So that is the video. So I hope you enjoyed this one. And I haven't been around for a few days or so. Since I think Saturday, I didn't make a video since then. Apologies for that. Just being busy, flat out, getting home late and not having time. But back, and I'm sort of glad to be back, and I hope you get much more value. And yeah, so if you enjoyed this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below as well. And I'll catch you in the next one. Cheers.